Okay.
Hi, everybody. Dawn Burdick with Titleocity, and welcome. We're happy that you're here with us today. Today we have my partner in crime, Sarah Fierk. She is another agent advocate. We have Amanda Madden, who's our Director of Operations, and then Christina May, Director of Title. And we have done these, we call them Title 101s, but we actually hit on a lot more than just the basics of title. And then just kind of depending on questions that we get, you know, we'll kind of veer in that direction, but wanted to just thank you guys for coming on. You know, not all realtors are doing the Con Ed. They're not, you know, jumping on webinars and you know, and advancing, you know, their skills through this way. So congratulations for being here. We know that we're going to be sending the link to a lot of you today. So we appreciate you being here. And I think it's a lot of light bulbs are going to go off after you hear Christine and Amanda speak today, because there's things that maybe you've already heard throughout, you know, the years, but we do these, you know, periodically, but sometimes the, you know, file that you're working on right now, the transaction you're working on right now actually applies to what we're saying. So not a bad idea just to listen to us in the car. We're going to try to keep this to about 35 minutes. And so, you know, probably some, you know, good time to listen in the car or listen while you're at home. But so without any further ado, Sarah, do you want to go ahead and take it over? And just a side note, Sarah and I are agent advocates, as I had mentioned, and our job is to make your experience here with Titleocity smoother. So we are happy to do that. You know that you can contact us anytime. We're here for you. We do more than just title here at Titleocity. So we are we want to help grow your business, and that is what Sarah and I do for our realtor partners. So Sarah has got it all prepped. You're on, Sarah.
All right, cool. So like Dawn said, we're all your awesome title peeps from Titleocity. There's a lot of experience in this scroll right here. So we'll do a super quick introduction in case you don't know who everybody is. Dawn and myself, we're done, but Amanda, could you tell us a little bit about your experience and what you do at Titleocity?
Sure. Hello. Good morning, everybody. I am Director of Operations here at Titleocity. I assist in all kinds of different areas of the company, but primarily I'm focused in the escrow and kind of agent experience realm of title. I've been in the business. This is now my 24th year, I believe. And I love it. It's my passion. It's what I do. Anybody who knows me or has had to call me for a question knows that I can talk title anytime that you'd like. And there's not really a topic that is, you know, not something that I can help you with or talk through with you. And if I don't have the exact answers, I know a lot of people that are a lot smarter than me and have a lot more experience that I can reach out to and get those answers. So when I say it's a passion, it's legitimately, you know, my life's passion. I love it. Eat, breathe, sleep, title. So I like it when agents reach out to me and call me for questions, you know, the really hard stuff or the unique situations. I love to get on the phone and kind of talk through those with agents and come up with either creative solutions to solve a problem or just getting you in touch with the right resources and things like that. So I'm super excited you guys are here with us today. Thank you very much. I want to touch a little bit on what Dawn said about, you know, Title 101. I think we want to rebrand this and call it, you know, Title Basics and Beyond, because the beyond part is where we really get interesting stuff going on. A lot of times if we do these, whether they're in person or on a Zoom, we get to the Q&A section and one question or one scenario that somebody throws out sparks other questions, and it gets a dialogue going where whether or not it's an agent that you maybe work with in the office or not, it's an agent at a different office or a different brokerage, this conversation starts to bubble up around title, and you never know kind of what takeaways you're going to have from that. So that portion of it is probably my favorite bit, but all the content that we're going to share today that Christine's going to start off with is very valuable as an agent. Not to say that you need to know every single thing about title, but because your job is so big, you've got to know a little bit about each of the parties that are involved in that real estate transaction. So we're hopefully going to give you some information here that you can take with you, and then of course continue to be a resource.
Awesome. And Christine, can you just tell us a little bit about you? I know that you're going to be the one that gets started, and Amanda's going to kind of wrap us up, but tell us a little bit about you, your background, how long you've been around us. So.
Sure. Thanks, Sarah. My name is Christina May. I am the Director of Title Operations for Titleocity. I've been in the title industry for this is my 26th year, so I'm aging myself a little bit, but that's okay. My passion is problem solving, and Director of Title allows me to do that on a daily basis. I pretty much do an internal underwriting. So, any kind of scenario that comes up, we assess it, we put the pieces of the puzzle together, and then we come up with a solution to smoothly and safely get all of the parties involved to the closing table. So I love doing that because there's a certain satisfaction at the end of the day when you take something that may not be easy and you get it done. And that is where my satisfaction comes in the job. I love seeing when the buyers are happy and the sellers are happy and the agents are happy and the lenders are happy and our internal staff is happy. So we do what we can to get us to that point. So that's just in a nutshell what I kind of do. So I'm looking forward to speaking with all of you today and hopefully sharing a little bit of information that you guys might not know. So we're going to get started. We'll go through the slideshow, kind of give you a brief overview, and then towards the end, we can definitely do a Q&A. Those are Amanda's favorite part, my favorite part for sure, because that's when you get into the nitty gritty, the real life, scenarios, like a what if I had this. Those are our favorites. So we will definitely leave some time at the end to be able to do that. So let's get started. What is title? Title is the foundation of real property ownership. It is the owner's right to possess and use real property. Title is the evidence of a person's right or extent of a person's interest in the real property. It is the means by which ownership is asserted and the right to possession, use, and enjoyment of land of the land is maintained. Titleocity will begin the title process when you place an order for the title commitment. The more information you can provide, the better. This is one of my favorite topics on our Title 101, because the more we know in the beginning, the smoother the transaction is going to go to the end. So no tidbit of information is ever too small. When you're going on a listing and you're talking to the clients about selling their house, and you ask the questions, hey, have there been any bankruptcies, any divorces, any life changes, deaths? Do you hold your property in a trust? All of these things that you ask in the beginning are very valuable through to the end, because the quicker we get out in front of something that may cause a delay, the faster we can get a solution, and then there's less hiccups. So placing an order includes the listing agreement and or purchase agreement, the seller's title policy, if you have it. That's a rarity nowadays. Back in the day, you always produced your previous owner's policy when you placed the order, because you used to get a credit on your premium invoice for that. To receive that credit, it's no longer necessary to provide that policy. However, that prior policy is super useful for the transaction. It gives us like a mini book report of what occurred prior to what we're doing. So that is valuable. You definitely want the name of the property owner or the trust or entity. That gets us going, that we're in the right path and the right person is in title. Name of the buyer, if you know who they are. Very important. Tax parcel number, street address, and legal description. So it's a misconception that providing an address is enough, because an address is not insurable. We do not insure an address whatsoever. We insure the legal description of the subject property. So including that parcel ID or that legal description is important. It's very valuable, because that tells us we know what we are going to propose to insure. We know we have the right property. And I'm going to give you a quick example. Say you have a property where a house sits on a lot and the owner owns the vacant lot next door to it too. If that purchase agreement only comes in with an address we're not going to know about the vacant lot. If that purchase agreement comes in showing the lot number to the lot with the house on it and the additional vacant lot, the legal description is hold. So the more knowledge, the better, for sure. The name of any lender, if you already know it at the time of handing in the purchase agreement, that's useful too. So who owns it? This is a big part of what the abstractors do. The abstractors go to a database or the county register of deeds, and they pull all of the recorded documents on the subject property under underwriter guidelines. So that includes any transfers or conveyances, any open liens, any documents necessary that might fall in that chain to help us do our job and put the pieces of the puzzle together. So who owns it? A deed is a document by which the right of ownership in land is transferred, whatever the right may be. We have numerous types of deeds out there. Warranty deed, quitclaim deed, covenant deed are just to name a few. I'm going to give you an example. A covenant deed is a deed where it doesn't warranty the transfer. So most of the time, the grantor, the person transferring their interest on a covenant deed, does not necessarily occupy the property. So they can't exactly warrant the transfer. So there, if you go online, and we can definitely provide you some alternate resources that explains the difference between the types of deeds, so you got a broader idea of what they mean. But the most common insured transfer is the warranty. I'm sorry, is there a question? Okay, I'm going to keep going.
Yeah.
A deed does not show liens or claims. Okay, those are separate recorded documents. Several ways to hold title. We call them tenancies. So here's a few common ones and what they kind of mean. Now, when it comes to advising your clients on the types of tenancies they should use when they hold title, the title company is not able to do that because it is considered legal advice, and we are not attorneys representing any client. So we can give you an idea of what they mean, but we rely on you to tell us, or that your client to tell us, the tenancy they choose to hold. So there's a few brief descriptions on tenants in common, joint tenancy, tenancy with rights of survivorship, and so on. Search and exam. I touched a little bit on what the abstractor does with pulling all of the documents necessary to examine the chain. Now, when I say documents, it's kind of like taking pieces of a puzzle and fitting them all together and making sure it all is one big picture and there's nothing missing. When the abstractor does all of this, they pull everything they can from all the resources available to us, and then they turn it over to an examiner. An examiner looks at all of these pieces of a puzzle and puts all of the pieces in their place. Requirements on your commitment are determined based on the puzzle pieces not fitting together and what needs to be done to fill those gaps so the pieces can come together nicely.
I want to make a Titleocity puzzle now.
I know, right?
Yeah. I'm writing it down.
So once the search and exam is completed, it goes through an underwriting process. And an underwriting process determines the liability as the insurer, because sometimes it's forgotten that our ultimate job as a title company is to insure the transfer of title, insure the lien position. So it goes through an underwriting process here. It goes through an underwriting process here to make sure that our liability, to determine what our liability is and what courses of action that we can take. Title insurance is a form of insurance that differs from other forms. When you think of that, you think of, health benefits or AAA, even insuring your car. There's all different kinds of insurance. Most forms of insurance assume risks which arise out of future events, such as an accident, or damage from a hurricane. A title insurance policy is a contract of indemnity against loss or damage arising out of defects in or liens on the interest insured under the policy. A title policy indemnifies the insured from existing, although unknown, risks that may cause claim or loss in the future. A title insurance policy contains a duty to defend. So at that point, when we issue the policy, we have a duty to defend all of the things that we chose to insure. The title commitment. This is your pre-policy. So it's a commitment to insure. Your title commitment tells you all the information that you're going to need to know to get to closing table with regards to title. It's going to show you who is vesting in the property. It's going to show you the legal description of the property that's going to be insured and transferred. And then it shows you the requirements of what needs to be done in order to get us to the closing table. And Sarah, if you want to click to the next screen, I believe it's going to, yep.
I have all the schedules. We can just run through them real quick.
Perfect. So I already went over Schedule A. That's the first page of your commitment and what it shows you. Schedule B, super important. These are the requirements, as I was referring to. They can have anything on there from, let's say a trust is in title. So we're going to need a certificate of trust. Let's say a mortgage was found. So we're going to need a release. Let's say that a divorce was found. We're going to need to review a judgment of divorce to see if any further requirements may be necessary. Schedule B requirements is your place to find all of the things that we're going to need to clear the chain of title.
And one quick side note about Titleocity, something that we do that's different than other title companies is on that Schedule B, we will put that in an email for you and let you know, hey, we need you to help us do this or this or this or this to get that done. It's not just like, oh, here's your commitment, here you go, read it and figure it out. We're going to let you know the way to do that or how we can all work together on it.
Yes, that's definitely, I know Amanda's going to touch a little bit on that in a few of what makes us stand out. And I like I said, I've been in the business 26 years, so I've gotten my chance to see and experience different title companies. And I can honestly say Titleocity is, it basically has I like to call it a concierge service. We really work with you through the process. We don't hand it off to you and say, come back to us when this is fixed. We really walk through the whole process with you. So Schedule B, super important on the requirements. We touched base a little bit on this. Any defects on title could be open mortgages, any liens that need to be either payoffs obtained or releases obtained, or anything to get them cleared off. We do work with you on obtaining those things. We've got a lot of connections on where you should go to do that, and we can definitely help you and advise you through the process for sure. Oh, it's one of our favorite things for Amanda and I to talk about. This is just brilliant. So I'm going to toss it over to Amanda in a minute. This is our Titleocity process wheel, and it really is the end all be all of what happens. We started out talking about the top of the wheel, and then we started to go clockwise around it. And it's really a brilliant perspective of what the process looks like. And this will definitely help you understand the process and advise your clients, so you keep them in the loop of what the process really looks like. So at this point, when the commitment is complete and established, the commitment is turned over to your assigned processor. The processor reviews the commitment and then reaches out to you and your clients to take the next step. And at this point, I'm going to turn it over to Amanda Madden. She's great at this, and I look forward to hearing what she has to say.
Thank you, Christine. Christine and I, for anybody who is interested, are kind of like the yin and the yang of the title company. I love her. I respect her. She has more knowledge probably than any examiner or internal underwriter that I've actually had the pleasure of working with. We're very different women, and we complement each other very well. So behind the scenes, everything that Christine just described is kind of this behind the scenes magic and the real work that's happening to dig up all that public record and put that puzzle together. And then I rely heavily on Christine once we get to kind of the escrow portion of the transaction, because there's oftentimes that, because we do come from very different experiences and different knowledge with the business, there's really nothing that we can't figure out together. And so that, I think, is a huge benefit to our clients. Current clients obviously know that. Future clients, we try to really drive that home, that you do have a team here of people who genuinely love what they do. And if we can't figure it out, I guarantee there's nobody that can. So once the commitment is done, is kind of what I like to say, and I don't think Christine likes this bit, but where it starts to get kind of exciting, right? So now we have the commitment. We know exactly what we need to do to ensure this transaction. So I like to kind of follow the wheel because I do think that for a lot of agents, title is kind of confusing. You know that you need it, but you're not quite exactly sure why or the timeline, the process of it. So this wheel, I feel like, is a nice thing to share, even sometimes with your clients, as an expectation of the timeline of things, or the kind of way that we're going to go through this. So once the commitment is in our hands as the processing team on the escrow side, your processor is going to reach out to you, like Sarah mentioned, and kind of break down into layman's terms what we actually need. If you've ever looked at a commitment, read a commitment, they can be kind of tough to read sometimes. There's a lot of standard requirements on Schedule B that we really don't have to fuss about. Those are just standard things that are on every commitment. And then we have our transaction specific requirements. Those are the things that your processor is going to be reaching out to you to say, can I get a payoff authorization? Can you tell me if you have contact information, or if your client has contact information for the homeowners association? Sometimes there could be liens that pop up that we're not expecting, and that you're not expecting, and your client's not expecting. And that's when we get a little bit deeper into, trying to solve those problems and come together and figure out, okay, what's the minimum of what we need to get? What would we really like to see? And how do we get there quickly so we can stay on track with closing within the contract date? So that's kind of at our 2 o'clock hour here on the wheel, the clearing of the title. So we're gathering all that information. Once we have all that information that we need, we've received the payoff, we've received the HOA status letter, we've cleared any other liens or issues, defects that might be on title. We're kind of clear, if you will, on the title end of things. So if you're representing the seller, we'll kind of tell you, hey, we've got everything we need. Thanks so much for providing that judgment of divorce or providing that certificate of trust. And then we're really just waiting for the lender to give that clear to close. I think every agent I know, top 3 things they like to hear is clear to close. Appraisal pass, right? Inspection pass, things like this. So we're kind of at the mercy of the lender when we have a lender involved in a transaction. So for a cash transaction, once we've cleared all the items that are required on Schedule B, then we're ready to go. We can schedule a closing. When we have a lender involved, we're waiting for that lender to say, we officially have the clear to close, and then we can go ahead and schedule. So once that happens, once the closing gets scheduled, the processor who's been working on your file since it came in is going to be transferring and kind of handing that off. It's like a relay race, right? They're handing off that baton to the escrow officer team. And those escrow officers are going to take the commitment, they're going to take the purchase agreement, they're going to take any lender closing instructions, and they're going to put together our closing statements, the Alta closing statements. Usually what happens is, and this is kind of across the board now, the processor or the escrow officer is going to send those statements out for review, right? Not to say that you have to scrutinize every line of that, but it's really nice and it's important that you take a glance at it, check to make sure we have the commissions correct and we didn't, accidentally miss something. Make sure your compliance fee is there. If your seller has occupancy, make sure it's there. Oftentimes when we send those statements out for review, we might get an email back that says, oh, sorry, they're actually going to give keys at closing. We're no longer going to have occupancy. No big deal. We can remove that from the ALTA statement and send out a revised copy. When those initial ALTA statements go out, typically at that point, we don't have CD approval. So what the escrow officer is doing behind the scenes is they're taking that lender's closing instructions and they're putting in all of the mortgage closing fees and costs and sending that back to the lender for approval. That doesn't happen instantaneously. That typically is a process where there's a little bit of a back and forth. Even if we enter everything that's provided on those lender closing instructions exactly as they've instructed us to do, oftentimes we'll send that back and the lenders have little tweaks and little things they want us to adjust or change in order to get to that approved CD. And that all has to do with different things, you know, minimum investment things and different things with the escrows. Usually we're kind of adjusting little things at the 0 hour before we get approval. Once the lender is satisfied with all those final numbers, they will tell us that the CD is approved, which is fantastic. And every escrow officer is kind of sigh of relief once that CD is approved, because we know we're moving in the right direction. And once that CD gets approved, then the lender is going to go ahead and release to us that mortgage package. So we get the mortgage package, we've got our real estate documents, the escrow officer is going to draft all of those real estate documents, and we're going to combine all of that together into what we call a closing package. And now we're kind of rounding third, right? The closing package is provided to the closer, who's going to, you know, assist in the closing, conduct the closing, notarize the documentation, and we're ready to go. Back in the day, it was very common for all parties to be at the same table. It was kind of like an event. You know, we had the buyers, we had the sellers, both agents, typically a loan officer, and everyone sits down with the closer and we close this transaction. We know that those days are kind of gone. Occasionally it still happens. Every time it does, I'm always like, oh, wow, everybody's at the same table. It's a throwback. That's exciting. So the closer sits down, whether it be all together or with just your client perhaps, and gets all those documents signed. So we're still not done at that point, really. Once we have all the documentation signed, if it is a split closing and the parties are not signing together, then we have to do this kind of dance of exchanging all of the documents. So ABC Title has to send me all of, say, the seller signed documents. I have to send ABC Title all of our buyer signed documents. And both title companies have to agree kind of that we're satisfied with everything that's been signed. And then the money gets exchanged. So if we are insuring the loan policy on a transaction, if you are the selling agent, your client is a buyer, and we're insuring the loan policy, we're in control of all of that money. We're getting the money from the lender, we're getting the money from the buyer, and typically we are going to be the company that's dispersing the seller's proceeds and dispersing the agent's commission, both agents, not just the selling agent, but both agents' commissions. That's typically how it goes. Occasionally there's a deviation from that. Occasionally there's a circumstance where we're wiring to the other title company, perhaps the seller proceeds. Maybe they have a purchase coming up in the next couple of days with ABC Title, and it makes more sense, you know, instead of us issuing them a check or sending a wire, it makes more sense sometimes for us to go ahead and wire to that other title company so that it's easier when those sellers go to purchase their next home. So I want to touch on real quick something that came up this week, which was the timing of closings. And I think I've mentioned it in these title basics before, but you know, if you have a seller who's saying, if you know they're super analytical and they're really, you know, type A and they want what they want, if they're insisting that, hey, I'm not going to sign, you know, unless I know I'm getting a check or unless I know I'm going to get proceeds that day. If you know these things, let us know. You know, the more information that we have, the better, because when it comes to the scheduling of the closing, we want to make sure that the timeline makes sense. We want to make sure that if the expectation is that your seller leave the table with a check or with a wire, and that they're not going to give up keys, say, until they have that, we probably don't want to close at 4 p.m. right? We probably want to close a little bit earlier in the day to allow time for either that exchange of documents or for the wire to be able to actually be processed and go through. So just something, again, that came up this week that I think is important to think of the kind of dance of it all. You know, if you have a seller that says, I have to sign at 9 a.m., I have to sign at 9 a.m., okay, great. That could also be a little bit sticky, you know? So I think just managing expectations with your client as far as what they expect. If they absolutely cannot close before 4 in the afternoon, it might be a good idea to right away let them know that's fantastic. We can absolutely accommodate a 4 o'clock. However, there is then a chance that you might close an escrow, meaning that nothing actually gets dispersed. So if they're okay with that, fantastic. What we don't want to see and what nobody really wants is a client who sits down at the table and signs at 4 and suddenly we don't have the lender money, say, yet, or we don't have the documents from the other title company and we can't disperse, or the Fed, you know, cuts off approximately about 5 p.m. Maybe we just don't have the time to get that wire out. If the client's okay with that, fantastic. What we don't like is when a client is sitting at the table and suddenly they're shocked and disappointed that they're not walking away with money. So my joke is that if I were a real estate agent, I wouldn't close anything before 11 a.m. and I wouldn't close anything after 3. Of course, that's not always possible. We have to accommodate our client's schedule. So, but just food for thought, something to think about. But really just comes down to managing expectations and kind of knowing what your client's, you know, big 3 is, right? Like what their big 3 things. Like if it's really important, this, and trying to get ahead of that in the beginning so that we can not only manage expectations, but also exceed, hopefully, expectations. So it's all been dispersed. We're at the table. Say we're all together. Everyone gets their packages. Everyone gets their checks. If we have lending funding approval requirements, the closer will oftentimes be sending the lender some documentation from the closing to prove that it's closed and to show the lender that everything's been signed appropriately. And then they kind of also then give the go ahead to say, go ahead and disperse those funds. Lending approval, funding approval is not on every loan. Certain lenders always require it and certain lenders don't. So you may or may not have to deal with funding approval. So if the lender gives us the go ahead, we release everything, everybody's happy, keys get exchanged, handshakes, everybody's good to go. Congratulations. At that point, we're still not done. So the closer is going to take that whole closing package, bring it back to one of our offices, and our post-closing department is going to what we call wrap or kill out that file. They're going to break the whole file down. They're going to take, most importantly, the warranty deed, the mortgage, and any other documentation that we have to record. And they're going to send those documents for recording. We probably need to update this a little bit, our wheel maybe, even though I'm in love with it, because typically after those documents get recorded, traditionally we would then be issuing the policy, the actual insurance policy. But we have upgraded a lot of things here lately at Titleocity, and in kind of coupling with the upgrade of our software, Christine made the decision, and we started working on issuing policies at the table, which most lenders get a short form policy at the table anyway, but the owner's policy at the table is really nice. You know, your buyer who's insured on the owner's policy doesn't have to wait for that to come in the mail. They don't have to follow up for it. Issuing policies at the table is just something that's it's really a benefit to your client, and it's something that we have to take a little bit of extra care behind the scenes, but we think that it's worth it. So and that's pretty much it. Once that policy has been issued, keeping in mind, typically in the state of Michigan, the seller pays for that owner's policy. That's what we call standard practice. And it benefits the buyer. It covers the buyer for the entire life of the time that buyer owns the property. So again, to kind of touch on, and I'm almost done, I promise, I know I go long, to kind of touch on what Christine said about title insurance versus different kind of insurances. You know, every other kind of insurance is insuring a future unknown risk, where we're insuring the past. And every other kind of insurance, you pay a premium, probably monthly, maybe yearly for HOI or something. But it's a constant, you're constantly having to pay that premium. With an owner's policy, it's paid one time, typically by the seller, and it covers your buyer for the life of the time that they own that policy. So even though we are an insurance company and we are regulated by the Department of Insurance, as is every other insurance agency, we are different and we are unique in what we're actually covering and what our product means. So that's really all I have. If I don't know if anybody else has anything, or if we want to shoot it out to questions.
I'm gonna interject really quick because I just like to do that. I should put this other stuff on a different slide, the streamlining the title process. So there are 2 different applications that we have here at Titleocity that's unique and super cool and forward thinking and makes everything, you know, easier for you and for your customers and for us to all be on the same page. There's a Zakam app. It is, you can deposit your EMDs right into that. I like to describe it as if you're making a check deposit right into your bank account, you take a picture of the check. So you do still need a physical check, but you take a picture of it, send it right over to us. And I think when I played with it, I did a test one, it came to our account in like 6 minutes. So it's amazing. It's really cool, especially if, you know, you're in Brighton and your customer is in Troy and you don't want to have to drive all the way out there or anybody drive, you know, it's a snowy day like this. They can just deposit it right in and nobody even has to get in their car. So that's very cool. And then Qualia, that could be a whole other class, but it is the most amazing software that title companies can have. And guess what? We've got it. So very cool. You can, any file that you have, you can log in there and look at any file at any time of the day. You wake up at 2 a.m. and you want to check it out, go ahead, log in. That's cool. And net sellers apps, if you need help with things like that, we're here to help you too. So side note, and I do know that we could just run back to Christine really quick. Amanda already touched on the final policies, but I don't know if Christine, you want to throw anything else in there before we move to questions?
Amanda pretty much wrapped it up in a nutshell, the final policy. You know, the owner's policy insures the buyer. It's really important to have, and we always recommend it. You know, the lender's policy ensures the lender's lien position, just to touch base on that. So if you're representing the buyer and they're getting a mortgage, that loan policy that's being issued ensures their lender that they have first lien position. But yeah, Amanda said that, you know, issuing them at the table, we're super excited about that. It's just one more efficient, quicker response for your clients, so they don't have trailing docs coming in months later. And you know, it's just one-stop shop. They can wrap it up and enjoy their new house, or, you know, start looking for their new one. Awesome.
Check out our QR codes at the bottom, pull your phone out, take a picture, follow us on all of these wonderful social media sites. We can go to questions. I actually do have 2. So if there's anybody listening in that has questions, 2 of them